Shares of Lowe's were trading lower on Wednesday after the home improvement retailer reported earnings and revenue that came in short of analyst expectations. Lowe's reported earnings of 70 cents a share for the first quarter on revenue that rose to $14.1 billion from $13.4 billion a year ago. Analysts had been looking for earnings of 74 cents a share on revenue of almost $14.3 billion, according to Thomson Reuters. The results are in stark contrast to rival Home Depot, which reported quarterly earnings and revenue that beat estimates on Tuesday. Lowe's chairman, president, and CEO Robert Niblock called the quarter strong and added, "We generated comparable sales growth in all regions of the country and across all product categories, driving strong earnings per share growth." Lowe's maintained its full-year comparable sales growth forecast of 4% to 4.5%. In New York, I'm Brittany Umar for The Street.